This is Andrew Stotts of A Stotts Investment Research to look at China Equity FVMR Snapshot, or what I like to call China in your hand, every week. Remember that I look at stock selection and markets from a FVMR perspective: fundamentals, valuation, momentum, and risk. So let's get started with fundamentals and look at China relative to the world. We can see that China's ROE is just slightly below the world's ROE. And we can see consumer staples is expected to deliver the highest ROE in 2016 and consumer discretionary in 2017. So this gives an idea of consensus of all analysts. Dividend payout ratio is below the world's average, and we can see dramatically below it, almost 28% versus 41% for the world. So companies in China retain a lot of the profits that they make. We can see high levels of payout at energy and telecoms companies, which is more than 50% of their profits. Now, as far as valuation is concerned, China is trading below the world on a PE basis, in fact, significantly below the world. However, if you were to look at the financial sector, which is trading at 6.7 times, and back that out, which is almost 30 or so % of the market, we would see that China is actually trading above the world average. Now, energy is currently most expensive, but infotech is expected to be most expensive in 2017 at about 30 times PE. What we can also see is that on a price-to-book value basis, we can see that China is cheaper than the rest of the world, and infotech is most expensive on price-to-book, but doesn't deliver the highest ROE, in fact. So unlike in, let's say, the West, where we have infotechs that are making tons of money, the infotech companies in China are less expensive but earning less profits. And financials trade below book value, mainly because of the low ROEs, or let's say moderate ROEs, but most importantly, risks related to the sector right now. Now, if we look at momentum, we can see EPS in China is expected to grow faster than the world average in 2016, but around the same in 2017. So about 8% in 2016. Earnings are expected to see a good rebound in energy and in telecom sector, and are very high in infotech also. If we look at price momentum, we can see that China actually has fallen by 19.5% versus 2.7% for the world for the past year. And only in consumer staples and infotechs, the price has dropped less than 10% in the past 1 year. So it's been a brutal year, obviously. When it comes to risk, China has a little bit more debt and higher gearing in the last full period that we have. Infotech is net cash, while the gearing is high in utilities and materials. And volatility has come down in the past 3 months. So the past 3 months, volatility is about in line with the world, but in the last year, it's been massively volatile at 30%. And we can see that volatility is high in the consumer staples sector, and volatility, the price volatility, again, is high in the telecom sector. And then finally, financials have been least volatile on both the past 3 months and 1 year. So there you have it. If you get this product, you'll always be up to date. You'll know all the numbers. You'll be professional. And most important, you have to do nothing after you sign up below and get the China Equity FVMR Snapshot, because it will be emailed to your inbox every Monday.